now. Sushil Kumar Agarwal, who's whole-time director and CEO of Aavas Financiers, joins in to talk more about how the quarter panned out for them. Strong NII, but what has led to a comparatively modest profit growth?
So at Aavas, anyway, we are into affordable housing segment, and consistent growth is our behavior and theory. So we'll see H1 to H1, if we'll compare, we have grown our AUM number by 49% and disbursement number are 37% growth, which are in line with the guidance which as amendment we are following. Profit wise, again on IGAP side, we are 51% high, and on this India side, we have 39% growth. So majorly, the only difference between the two numbers is the assignment transaction. So last year, assignment transactions were high. This year, because we were coming up with the IPO and the equity was already planned, so the assignment transaction was low. Otherwise, if we see normal accounting treatment, the numbers are same.
Right. What were the drivers of net interest income growth?
NI level numbers are in line with the disbursement growth. So disbursement numbers, I told you already, has grown 37%, and this has resulted in AUM growth of 50%, because as you know, in our business, the disbursement numbers, because our loan tenures are high, average tenures of the book is around 13 years, so which ended up in higher AUM growth, and this AUM growth has resulted into high NII growth. And we have maintained our yields also, and we are able to maintain our spread numbers also vis-a-vis H1 last year to this year.
Okay, so what are the asset quality trends like, and would you say that there are any NPA risks in the housing segment?
We are a retail affordable housing finance company. Average ticket size is less than 9 lakh. If you see H1 last year to this year, our gross NPA has reduced from 0.81% to 0.57%. So this number has improved by 24 basis points. And in absolute amount also, our 1 DPD plus number. So last year, our 1 DPD plus number was around 7.33%. Now, as of 30th September 2018, our 1 DPD plus number is 4.07. So there is significant improvement in asset quality from 7.33% to 4.01%. In absolute amount also, last year's 234 crore rupees, and it is this year 193 crore rupees. Whereas AUM has increased from 3197 crore to 4759 crores. So AUM has grown 50%, and despite that, the absolute number of 1 DPD plus has reduced.
So what is the AUM split like, and what are the trends in the affordable housing sector? Any large developer loans or LAP?
So as you see, since we are in affordable housing segment and we fund mostly single unit houses, we are not dependent on builder-led supply side. We work in tier 2, tier 6, and 60% of our funding is for new self-house construction, and rest 38% is for the new house purchase or resale house purchase. And we don't fund any corporate loan, any high-ticket LAP, any builder funding also in our book. So our demand is consistent. In fact, we are seeing a uptake in the current scenario for the demand also in our segment. And whatever we have demonstrated in last 6 months or last 1 year, I think liability side also and growth side also, from the demand perspective, we are seeing no sign at least at this point of time for any reduction in the growth numbers. But yes, we need to see this market for next 3 to 6 months. But I think we are well poised from the company perspective in terms of liability side, in terms of the capability which we have created in terms of branches, in terms of technology, in terms of distribution. We have added around 80 branches in last 1 year, which will result in again growth side in the near term future.
Right. What's the ALM position if RBI were to tighten some norms for NBFCs? How well prepared are you?
1,000 crore sanctions and around 800 crore rupees in account already with IPO proceeds and 400 crore rupees. As a company, we have this policy that we keep always cash equivalent money in bank account for next 1 quarter disbursement. Plus IPO proceeds is already there. So with 800 crore approx in the cash equivalent balance plus 1,000 crore sanctions. So we have around a very strong position on the liability side. As I've told you, our assets after prepayment is 7 years. Our liabilities are 13 years, 11 year plus. So we have positive ALM for next 5 years. In the near term, 1 year scenario, I have told you that we have sufficient funding available for our business numbers and growth numbers which we are seeing for next 12 months.
Right. So what growth are you working towards, an improvement in ROEs that investors can look forward to?
For the future, I think we cannot make a comment, but the things which are like the performance which we have made over the last 4 quarters, I think we will be able to sustain for next 4 quarters. Spread level we maintained last 4 years 5% plus. And we are hopeful that in near term also we will be able to maintain these kind of spreads. On the asset quality side also, we will be able to continue the same kind of asset quality which we have maintained over a period of last 3 to 4 years. And the profit growth will be in tandem with the AUM growth.
Okay, we wish you the very best for the future. I think we need to change